Hi, everyone, and welcome to this episode of Money Moves. Today, I want to talk about a strategy that I've been experimenting with here in the short term due to some potential concerns I have for long-term returns. And the reason for that is this chart, which I will put in the description. Of course, we got to get to my bi-weekly tracker so we can talk about how much money I lost in the stock market, and it was quite a bit. Then, of course, we do have some jelly this week, which is something I enjoyed outside of the markets. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this as well as individual stock reviews every single week, so make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. Here we have a list of all my trades on IWM from 7 December all the way to 12 January. And you can see how it goes here. So we start with put credits, did that twice until we got assigned, started selling calls until we got assigned on the call side, selling puts again, selling calls again. You can generally follow this trend all the way through with the pluses and minuses listed here. And with the original price here being at $215, I used that for my close price, and you can see my cost basis, which is the sum of all these gains and losses, reduced my cost basis by somewhere around $2,000 or $20 per share, which is a pretty large gain in just over a month. And you can see that's approximately a 10% return. Obviously, if you've been following the markets, this kind of a strategy did not do extremely well over the last couple of weeks, as the market did tank pretty aggressively, but this strategy is still doing better than holding the shares outright. And the reason that I'm doing research on this particular style of trading, especially in short-term options, is because of a chart like this. I found this chart because of Game of Trades, which is another YouTube channel that does a lot of technical analysis on some pretty interesting charts. Otherwise, I don't know if I would have ever found it, so definitely check them out and check out this chart, which I will put in the description. Basically, it shows the future expected return based on current stock allocation. And right now, investors are approximately 51% stocks, meaning that the future expected return for the SPY on an annualized basis is somewhere between -2 and -3%. So that means over the next 10 years, if you bought stocks right now, they're expecting you to have negative returns over the next 10 years, meaning that this is expected to be a long-term top. Now, I'm not sure if that accounts for dividends being reinvested. And of course, if you're continuing to add money to that account, your dollar cost averaging down as the market continues to downtrend, which is the expected direction based on this chart. So I'm trying to do research into how to make money even in a market that is expected to downtrend 2 to 3% on average for the next 10 years. And if you have any ideas outside of selling options and collecting premiums or other investments like real estate, which I am doing through things like Fundrise, definitely put those down in the description too, because it certainly seems like a difficult time to be a buy and hold investor. So to lay a little bit more detail out in my trading style here, basically I'm selling the at the money puts anytime I see the market moving down and I don't have a position yet. And that allows me to collect about 1.5% in terms of credit here. You can see it's around $3.50 or so on IWM, which is currently trading right around $195 per share. So this is a big boy trading strategy. You do have to be able to own these shares. There are certainly some other either individual stocks or ETFs that you could do this on that are a bit cheaper, but I'm trying to stick to the major indices here. And right now I have IWM, and that's because you can see here on the options chain, they have Monday, Wednesday, Friday options. So meaning that I can get 1.5% here for 3-day options. And the expectation is that I can get somewhere between 1 and 1.5% every 3 days, which is how I was able to generate that pretty large return in a short amount of time. Of course, if the stock continues downwards, you're going to lose money just like you would if you were owning those shares. But the hope here is that you can reduce those losses and reduce your cost basis over time. And this strategy seems to be working well for me on a psychological level as well as just as a trading style. So any liquid ETF would work for this, but most ETFs besides IWM, the QQQ, and SPY only have weekly options, which is still not a bad strategy. You can usually get decent credits in those weeks, but I do seem to prefer any ETFs that have that Monday, Wednesday, Friday, which currently is IWM, QQQ, and SPY. All right, moving on to the monthly tracker here. Let's talk about the bloodbath that was January 2022. Not a great time to be a stockholder. You can see my stocks here went from 103,000 down to about 94,500. Big time down move here at just over 8%, and that's with adding to these positions every single month, which I do in my retirement account. Then you can see my trading account here down almost 10%, which is certainly not great, which again is another reason that I'm looking into this new trading strategy, because what I was doing is certainly not working as well as the markets, and obviously I want to beat the market over the longer term. Otherwise, everything else is looking fine. Bonds basically flat, down a little bit. Real estate doing fine. Cash, big cash position right now, which is a little bit artificial due to some other things going on in my life, unrelated to the financial markets. And then you can see total, even with my monthly income and everything all together, down almost 5% on my total capital available here. So not a great January, not a great start to 2022, but hey, there's always some risk in investing, and sometimes you're going to have months like this. Otherwise, let me know down in the comment section what you think of my new style of trading, something that I'm trying out. Do you think the markets are actually going to go down on average of 2% every year for the next 10 years? Or is this just a short-term top and we should continue to buy and hope that the market continues higher? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future content. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to today's jelly. Today's jelly is Alex Milton. I recently discovered this guy, and he is incredibly talented. He takes a lot of really popular songs and puts them in different styles, whether it be country or Blink-182, Bare Naked Ladies, pop punk, anything like that. He'll take normal songs and make them into that genre, and he plays every single part of it. So he plays the bass, the guitar, the drums, and sings it. He puts it all together himself, and it's incredible. He's really good. So definitely check out these videos and comment down below what you think of Alex Milton, and have a great day.